many entrepreneurs are actually earning less owning their business and working longer hours. Well, now meeting someone like me could be a real life changer because I might be able to cut that in half or maybe avoid it altogether.
Noah Rosenfarb is a third-generation CPA, entrepreneur, and wealth strategist who sold 8 companies, taken one public, and helped high-performing families become rich beyond money.
I never hide the fact that I love money. And I think what happens for so many people is they get to a certain point and they're still chasing money, even though it's not gonna do anything for their life. More often, you don't need money. You need more courage and more thoughtful planning. Technological advancements are gonna make it so that everybody's capable of having the same strategic advantage. It's all gonna be democratized. So we've got to find other things that we could compete on in the long run. What I've used as my framework for helping to make decisions around those pivots is I like to look for.
Hey everyone out there, this is Alan, CEO of FreeCashflow.io. Welcome to Profit Powerhouse, the podcast where we sit down with inspiring entrepreneurs to uncover the secret behind their success. We're here to learn what drives their growth, the challenges they overcome, and how they master their finances. Our goal, to help you achieve the same success while maximizing your profit. Let's dive in. Today's guest is someone who knows the entrepreneur's journey inside and out, financially, emotionally, and generationally. Noah Rosenfarb is a third-generation CPA, serial entrepreneur, and the founder of Wealthrive. Over the course of his career, Noah has taken a company public, completed over $900 million in real estate investments, and helped countless entrepreneurs reduce their tax burdens and build enduring wealth. He's the author of 5 books and a recognized authority in exit planning and legacy building. But Noah's journey doesn't start in boardrooms or investor meetings. It began in forensic accounting, helping families navigate complex divorces and uncover the truth behind tangled financials. It was there he noticed something powerful. Many entrepreneurs are winning in business, but losing at home. That insight became the foundation of Wealthrive, a firm built to guide entrepreneurs through successful exits into fulfilling lives beyond their business. If you're looking to create a life of purpose, freedom, and financial peace, this conversation is one you won't want to miss. Welcome, Noah.
Thanks so much for having me. What a nice introduction. I appreciate it.
Yeah, of course. Can you share a little bit about your background with our listeners and what inspired you to start your business?
So I guess I got inspired, going real back to the early days. I grew up with a single mom. She'd have 2 jobs, sometimes 3. I always knew when it was payday. And in contrast, my dad was an accountant. You've mentioned I'm a third-generation CPA. He had his own accounting firm. And like so many of us in business, we'd have good times and bad times. But when I'd spend every other weekend with him, if it was raining, we'd go to the movies and then go bowling. Or, we'd go out to dinner. I could always order dessert. And so as a little kid, I started to realize that having more money meant having more choices. And so I was a young hustler, 9 years old, selling candy outside of school, traditional entrepreneurial start.
That's awesome. That's awesome. It's great to hear the struggles that you come and overcome. Is there a pivotal moment you want to share with the audience where it kind of all changed for you and you started on your journey on starting your firm?
I would say, maybe where it all changed was kind of the inflection point of where my passive income exceeded my expenses. And that's really, to me, where my life began, in the sense of I could prioritize, who did I want to spend time with, and what are the things I wanted to do, and what are the things I wanted to say no to, because I had that ability to say, you know what, I don't have to work for money anymore. I could work for who I am and what I want to accomplish. And that was a great turning point for me. I sold a business in 2014 and achieved that level of financial independence. And it's been a great journey kind of from there forward and see what I really want to accomplish with my life, and not just how do I make a small fortune, so that I could live independently.
That's incredible, Noah. It sounds like you achieved success quite early in your journey. What made it so that in the next 10 years, you decided that, hey, I have achieved some success myself, but I still want to help a lot of these inspiring entrepreneurs create generational wealth for them?
What happened was I found out once I had financial freedom, then I kind of pursued time freedom. And I had time freedom and financial freedom, but I was lacking meaning and purpose in my life when I no longer operated a business. And I started thinking I was going to fill that void through philanthropy. And I could certainly get into what I did and what it resulted in, but it did not fill my cup. But what made me feel valuable was going out and sharing my experience with other entrepreneurs and becoming a teacher. and sharing, hey, here's how I did things tax wise. Here how I organized my financial life. Here's how I, filtered opportunities. Here's the asset classes that I learned to enjoy investing in. And when I started going out and speaking, people would inevitably come up and say, hey, can you help me? And what transpired from there was kind of this evolution of like, okay, well, I go for a walk in the morning at 7:30 to 9 o'clock. If you want to call me, I'll be on a walk. I'm happy to chat with you on the phone. And then it was, oh, you know what? I'm happy to, meet you for lunch if you're local to me. And that was fun, but then people still needed more. And I had more and more people asking for help. And so a handful of years ago, I decided to answer the call and build a business and really satisfy the kind of needs that I identified among the entrepreneurial community that I was helping to educate them on, which is how to pay less in taxes.
That was very insightful. It sounds like a lot of them just came to you, right? They needed help and you were the perfect resource for them. But did you face the other side? Did you have to go and like, this is my own kind of background too, right? I would have clients that we would be on a call and they'd be like, hey, I read this on TikTok about this, tax saving secret. Like I can just pay no taxes, right? And for me, as a CPA, it's a little bit frustrating because there's a lot of hearsay out there, right? You can Google things. Non-accounting or finance professional would make up or tell stories on TikTok because they don't have to back it up, right? They could get away with a lot of things. So then when they come to you, they're expecting that level of myth about the tax code and things like that. Did you have to face any of those frustrations when you were dealing with kind of your client base?
It's interesting because I don't see it as a frustration for me. I see it as their frustration with the process of getting their tax returns prepared. So I used to prepare tax returns for others. I don't anymore. I haven't in over a decade. But what I found when I was in the industry was that the way to create profitability running an accounting firm is by charging the most reasonable fixed fee that the client would be willing to pay, and then having the work done by the lowest cost labor that I could find, which were typically my first year to fifth year associate tax accountants. And the gap that created for the client is that they would get their taxes prepared with accurate information, but they were often missing that opportunity to add the layer of strategic advice. And when I ran an accounting firm, I wanted to build that, but it created a problem because there wasn't enough leverage in it. Because if the partner in the accounting firm is the one that is the only one capable of delivering the sophisticated tax strategy, there's no leverage. So even if I charge, $1,000 an hour or $1,500 an hour, I'm better off taking a $2,500 tax return and having my team spend 5 hours on it and generating that volume of profitability. And so what I find is that I see this frustration among entrepreneurs that they have a thirst to think other people must be doing it better than me, and my accountant's not giving me any good ideas. So what am I missing? And unfortunately, there are a lot of people, especially on TikTok, that they say something, they leave out all the details. It doesn't really work as advertised. And so when people come to me with those kind of concepts, I just try and educate them about what's really real and how do you separate the good parts of what they're trying to advise you from what's going to get you in trouble.
That makes a lot of sense, Noah. And I'm sure you've seen a lot of quite successful entrepreneurs walk through your door, right, over the years. How do you define wealth for them? Like, what is a success, right, to them at the end of the day?
We have a framework that I've called Becoming Rich Beyond Money. And actually, I don't know if you can see it over my shoulder, but my latest book is called Exit Rich Beyond Money. And the framework involves really these three core areas that I've already alluded to. One is financial freedom, one is time freedom, and the other is having meaning and purpose. But even digging deeper beyond that and figuring out the details within each of those areas, because I meet with lots of incredibly financially successful people, but maybe those other two areas are out of balance. They're not really spending their time the way that they really want to. Maybe they say it sometimes, but they're so enamored with the work that they do and the money they make and the success they create in their work environment that it's easier for them to ignore other areas of their life that they may really find more value in paying attention to in the long run, kind of alluding to that divorce experience that I had early in my career, seeing so many hardworking entrepreneurs only to end up cutting things in half and not living with their children anymore. And, to me, that was not what would make a success. And so I think it's being well-rounded and being able to, do an exercise that I like to call a lottery exercise, going to buy that lottery ticket and thinking about what would change if you won, and then trying to orient your life more and more towards what that would ultimately look like. Because if you strip away, I want a bigger boat, or I want a, private plane, or, you put away the material stuff for a moment and you think about, well, who would I spend my time with and what are the things I'd start doing? And you start evaluating it from that perspective. More often, you don't need money. You need more courage and more thoughtful planning.
No, that was very cool. I would love to dive a little deeper there. What are kind of the early signs that an entrepreneur is kind of climbing the wrong ladder, right? Going the wrong direction, red flags that, if you can quickly spot and say, hey, this is not the direction you want to go down.
I think there's many of them. One is that you're not earning more in your business than you could earn if you went and took a job with someone else.
Very good point.
And that happens, unfortunately for many entrepreneurs, they're actually earning less owning their business and working longer hours than they would earn if they went and worked at someone else's company and helped them grow their idea. And so that would be mistake number one is, you may be a good jockey and you're on the wrong horse. And so you may need to abandon this current business in its current form for a better opportunity. Another is that when they get home, wherever home may be, the people around them are dissatisfied with their relationship with them, or they're dissatisfied with their relationships around them. And again, it may be unrelated to their work, but often I find there's some correlation because the entrepreneur who's often so hardworking, wants to be successful, and maybe is also trapped in that same lifestyle issue where it's like they need to grind it out because they need to make enough money to pay all their bills. So they're working late nights and they're working on the weekends and they're missing the kids' stuff and they're not spending time with their spouse. And, they're in this kind of rut that feels hard to get out of. And so you can see it either coming through on the financial side, or you might be able to see it coming through on the relationship side.
Yeah, I know we see this a lot, especially in our agency, right? Where entrepreneurs don't have their books in order for years. And then when you finally have it in order, you realize maybe how little profit margin they're actually making, right? Or how little they're actually taking home at a day for, working those 15, 18 hours a day, right? As an entrepreneur, you wear so many hats, right? You're the marketer, you're the lead gen guy, you're the guy doing customer service sometimes, right? You're kind of all over the place, right? So you're working actually a lot more than if you were just a 9 to 5, get to come home, eat dinner, play with the kids. So you want to make that worth it, right? But then when you don't know your numbers well, sometimes that's not the case, right? But then, as business owners, you kind of are a little bit stubborn at times, right? Because you really believe in your vision and what you set out to do. That may not always be the thing that you want to keep going down, right? And it's important to pivot, right? Have you had those kind of successful stories where you identify those early on and basically convinced your client or someone to pivot away from their dreams into something maybe even better?
Yeah, I'll speak from my own experience about pivoting because I've lived a lot of lives already, and especially when it comes to how I'm investing my time and my capital. And what I've used as my framework for helping to make decisions around those pivots is I like to look for swinging doors. So as opposed to entering into a new room and closing the door behind me from what I just left and not being able to go backwards, I'm now faced with, I'm in this new opportunity. I'm going to pursue this new, whatever the case may be, the business opportunity, the personal relationship. I want to make sure I have the flexibility to basically step back if I realize that what I just pursued is not really right for me. And that's happened to me on a number of occasions. I've, lost money in different areas. And usually when I lose money, I try not to do it again in the same way. So, maybe I'm backing out of that investment class. And in fact, one of the areas that I invested in early on was e-commerce. And so I had a, compression equipment company that was selling predominantly through Amazon. I had a book selling company that was on Amazon. I had a bunch of different watch business. I had a bunch of different direct to consumer, businesses that maybe I was buying at 3 times earnings with the goal that, okay, I should be able to generate a pretty good return on investment, especially when I layer in some debt at 6, 7, 8, 9, 10%, I'm going to be able to generate a huge return. And then it did not work out as expected for me. And so I abandoned the asset class, right? And now the good news for me was I could sustain that loss and move on to what's next. So I think part of taking risk is making sure that you can afford to be disappointed when you are making that pivot so that you have your backup plan, you have an exit strategy, you have a way. If this one thing that you're pivoting into doesn't work, you've got another move that you can make.
Right. So always keep a plan A, B, and C, right? Ready to go. Not just one plan and die on that hill is what I'm hearing here.
Well, I'm a planner by nature. That's my profession. And so not only does it fit me professionally, but it fits me personally. I've been planning since I was a little kid. I always, going back to that, little kid who was looking for opportunity. I always had a little spreadsheet of how much money I could make doing this thing and that thing. So I've loved planning, and I've, as a result, been able to achieve many more of my goals because I had a plan to achieve them. And I've always encouraged others, even if you're not a natural planner, to get out of your comfort zone, because all of the studies show that the goals that you write down and the goals that you have a plan for, you're more likely to accomplish.
Yeah. And it sounds like you're passionate for what you do, and people can see that when we walk through the door. And speaking of that, it sounds like you have this set of expertise that you want to offer your client. But what does that ideal client look like to you? Like if someone was walking the door, how will you describe them that says, this is the person I can help the most, I can maximize the potential for sure? Is that a revenue threshold? Is that the type of business they're in? What does that look like for you? And
it's all driven by how much income they're reporting on their tax return. So if they're
is there a number in mind that makes it tick?
$1 million or more of income, taxable income, I could generate a high ROI for them. Now, most often I would say my phone rings because somebody's selling their business, because that's, very few people make $1 million a year or more of taxable income. But when you start selling your business, well, now you're going to have hopefully a large capital gain event. And so if you're going to, let's just say, sell your e-commerce business for 10 million bucks, well, you might pay $2 or $3 million in tax on that transaction. Well, now meeting someone like me could be a real life changer, because I might be able to cut that in half or maybe avoid it altogether.
Oh, wow. That's will be incredible, right? So basically the type of entrepreneur who are at the point of their business where they can exit, right? And they're getting ready to, or they're thinking about it. That's the best point to come to you, Noah?
Well, that's great, because they may only have been making $500,000 a year, of taxable income, because they're buying inventory, they're investing in the growth of their business, right. But their business became valuable. Now they're going to realize it. But, I had someone that I was talking to the other day who's making $30 million a year of income.
Oh, wow.
I can make a big impact there as well.
Got it. That makes a lot of sense. And speaking of e-commerce, right now it's pretty... I'll say from pretty crazy times, right, in the world of e-commerce, especially with tariffs and how inventory management is very closely watched right now, and prices are all over the place, right? Any advice for e-commerce founders and entrepreneurs out there on how they can weather the storm?
It's a little bit of Monday morning quarterbacking now that as we speak today, there's this 90-day pause on the new tariffs. And, most of it, I think, is thinking through your supply chain, your business model, and where are the risks in your business? I would assume many of your listeners, their primary distribution channel is Amazon. And so, if you're an Amazon seller, you're relying on this single platform to reach your audience. There's a huge risk factor there where, and Amazon's gone through price changes and they've gone through different search changes. And, obviously, there's a reason that a lot of pure play e-commerce businesses are going to sell for 2 or 3 times earnings, because of those risks inherent in the business. And so what you want to figure out is, am I generating a high enough return on this business that's going to keep me in here and keep me attracted? And how do I diversify out of my single risks or the biggest risks that I'm faced with a single supplier that's in China, or maybe, I've got whatever it is. Every business has risks associated with it. And what you want to evaluate isn't just what's your growth strategy to grow your top line number, but how do you take a look behind that top line into all of the other things that go into your P&L and give yourself more anti-fragility, to use Nassim Taleb's book as a reference. We're talking about how do we become more anti-fragile? How do we make sure that we could sustain a COVID, that we could sustain a tariff, that we could sustain maybe an algorithm change on a search, companies, the way they're putting it together.
No, that's great advice, Noah. I would say like listeners out there are in two camps. Some are what they call Amazon purists, right? They believe Amazon is the way to go and that's how I should start my business. The other camp is, hey, we're the new gen social media guys, right? We don't need Amazon. All we gotta do is go TikTok live, use TikTok shop and go viral on my videos, and I can go down that path, right? Any thoughts on that, or which one you have seen more success with?
No, I wouldn't say I've seen more success with one versus the other. I think we're trading risks. So one is I'm going to rely on this monster platform that's doing the majority of e-com sales off of one platform, or I'm going to a social media channel like TikTok, which, hey, there's a bunch of issues there too, right? TikTok may get sold. We had the 1-day outage. So
yep.
I think what you want to do if you are in the, e-tail business is figure out how do you get access to your customer data. And once you have direct access to your customer data, that should mitigate some of your risk. If you're collecting emails and cell phone numbers and you have a way to reach your customer so that they could reorder from you directly in some form or fashion, that's going to help you de-risk your whole operation because you're going to have direct control of your customer.
That makes a whole lot of sense, and I think a whole listener out there are really shifting to that kind of thinking. Yeah, and then going back to your agency, Noah, is there anything that you want to kind of explain of like how you manage to have a great retention rate, right? How do you manage to keep your customers happy or your clients happy in this case, right? I think a lot of time when we get agency owners up here, their pain point is always there's a lot of competition out there, right? And it's always like, do we compete on price? Do we compete on value? What do we do that can, convince clients to stay with us and for the long term, right? Do you face those kind of struggles, or is there is it pretty competitive in your market? Like, is there like 2 or 3 players you're like, they're going to my competitors again, kind of thing? Versus like, actually it's smooth sailing. I keep my client long term because I have the secret sauce that I have going for me.
Yeah, I think competing on price. I grew up with a dad who was an accountant who never competed on price. And he trained me in that philosophy. He said, it's always better to compete on quality and value and communication and responsiveness, because those competitive edges you can always go to compete on price if you have to. But if you start competing on price, you're always trapped in price competition. And it's always essentially a race to the bottom of who could squeeze the margins the tightest and still make a living. And so I learned early on that being in a business where I could have less market share, but more profitability was always my idea of how I wanted to generate success in business. And that's still true to this day. I want to work with people who pay for value, not people who want to pay for time. I want people who recognize the return on investment that they can generate from a relationship with me and the companies that I own. And they're willing and to recognize that that comes at a cost. And it's hard to compare my cost to someone else's because you don't know what value they're going to deliver.
Got it. No, that makes a lot of sense. I think a lot of time when it's a race to the bottom, there's no winners, right? When you add that kind of rat race. Noah, the question I usually ask is, what really motivates you when things get tough? But it sounds like you may have the opposite problem, right? It's like what motivates you in that you may not need to be motivated to keep going, right? Like other entrepreneurs just trying to make it to where you are. Right.
Yeah.
Whereas you may be in the other end of the spectrum. It's like you kind of are self-made and you're there. You may not need this new business to really keep going and sustain your lifestyle, but then you still do it. Right. So what really drives you to want to keep this going?
I'll share an interesting story from yesterday. So I had a call with the family office of a multi-billionaire. And the gentleman who runs the family office is very sophisticated. He's been running this gentleman's family office for over 20
Mm-hmm.
years, multi-billion dollars. And he said, I'm really the linchpin in tax strategy development. And I've interviewed, dozens of sophisticated professionals, but he heard me speak and he liked what I had to say. And so he wanted to get on a call to talk about, how it might be helpful to his client. Of which I think there's a lot of opportunity because he didn't know about a lot of the things that we do. And so I was driving to an event with my wife last night. She's like, yeah, why don't you fly out to, California to meet him? And it's like, well, because I don't want to. She's like, yeah, but it's such a big opportunity. It's like, yeah, but, I want to be home. My kid's graduating high school. My wife and I are going to go travel to Oregon this summer. Then we're taking a year off with my daughter to travel around the world with her.
Wow.
And so I'm no longer motivated by money, but I still have a deep and longing desire to help other people. And so I think what's evolved for me is where my motivation used to be, how can I monetize a relationship or a transaction for my benefit? Now, I think that the new framework for me is what's the impact that I could make on this person's life? And what does that mean for them, for their family, for the people that work for them, for the charities that they choose to support? And how can I basically create a benefit to them that I know that I helped create that's going to make me feel good? And so that's really what's motivating me now is the impact side. And it's been a big mind shift for someone like me that grew up so money motivated. And what I do often when I come to those decision frameworks where maybe I want to splurge on something or, to me, it might be splurging to someone else. It might not even seem that way, is I like to go back and thank my younger self for being frugal, for being diligent, for being hardworking, and for putting me in a position where now I don't have to be so careful. And that's been a real shift in perspective and really helpful to what I think is leading a life that's rich beyond money for me.
Honestly, no, I think that's a very convincing pitch, right? If you're on a pitch, you're like, hey, I'm not motivated by my money. I'm taking you on because I truly believe I can make an impact and get you an ROI here and help you create the value that you're looking for, with the tax optimization you're looking for. You can see where I'm at, right, in life. And I'm taking you on only if I truly believe in this working relationship, right? Isn't that the best sales pitch, knowing that you're not there to nickel and dime them, right?
Well, I do
when you're charging the price.
Money. I never hide the fact that I love money, and I still love money. I've always loved money. And I believe in the power of money to help you achieve the life that you want and the goals that you want. And I think what happens for so many people is they get to a certain point and they're still chasing money, even though it's not going to do anything for their life.
No, that makes sense. So Noah, we get to the part now where we're trying to talk about the financial and tax management side of it. But I feel like we've been talking about this whole time, so it won't be anything new for the listeners out there, right? But just to frame it, how do you approach managing the financial side of business? It seems like you do it for all your clients, but what about for your own agency?
From the financial perspective, we're always looking to invest our capital in growth. And one of the reasons I like to invest in a business for growth is because of the tax strategy. So if instead of reporting profit from income, I take the money that would otherwise be taxed at ordinary income tax rates, 37% federally, and I invest it in my business by bringing on new people, by investing in new marketing strategies, by buying new equipment, all of those become deductions and reduce my profitability. But what they do ultimately is create a more valuable business. So I don't get taxed on the income side because I'm spending it for growth, and my business becomes more valuable, and I don't have to pay any tax on the value change in the growth of my business. And eventually, when I sell that business, I'd be subject to a capital gains tax instead of an ordinary income tax, which is like half the rate. And then again, for me, usually I have a few tricks up my sleeve for how to avoid the tax altogether.
Yeah, see, that's what we're trying to get out of you, Noah. I know everyone's situation is a little bit different, right? So I just want to speak in general terms. Is there one trick, let's call it, or one secret that you like to reveal on the show? We would love that. Or you're like, hey, something that people haven't thought about, right? And that they really should be utilizing to, help with their tax optimization with savings.
I'll share a scenario that I adopted for my brother, and also I used it myself personally, but his use case it might be more aligned with your audience. So my brother treats degenerative eye conditions, people that are losing their sight to things like macular degeneration.
Oh, no.
retinitis pigmentosa, and he helps them regain their vision. It's almost unbelievable because Western medicine doesn't say that that's possible, but he's an acupuncturist by training, and he's been specialized in degenerative eye conditions for 25 years. So he treats his patients at his office in New Jersey, and he has a very successful practice. People come from all over the world to get treated by him. But he wanted to start a new line. He was going out and teaching other acupuncturists how to implement his protocol for people that can't fly to visit him. And then he started inventing supplements and eventually started inventing equipment that people could use at home. And so what I encouraged him to do, I said, Andy, instead of putting that in your existing LLC, where you're taxed at ordinary income rates, let's put that business in a C corporation, a different tax structure, where the C corporation pays its own tax, maximum tax rates 21% federally, so you save 16% federally. And then instead of owning that business yourself, we designed it using a ROBS plan, ROBS, which stands for Rollover Business Startup. And that provision of the tax code allows you to own your own business inside your own 401k plan.
Wow.
Then what we did is we converted it to Roth. So he started this new business. He reported $10,000 of income, paid tax at $4,000. And eventually, through this series of transactions, he owns his new supplement, equipment, and training business inside of his Roth 401k. Now, that business has become very successful. It's generating profits. And let's just assume it created $1 million in profit. He paid 21% of federal tax, so $210,000. He'd have $790,000 left. He'd issue a dividend to the shareholder. Well, typically, if you own a C corporation personally, you pay a dividend tax, 20%. But in his case, it's owned by his Roth 401k plan. And just like if Google issued a dividend or Apple issued a dividend and you owned it in your 401k plan, you wouldn't pay any tax. Well, he doesn't have to pay any tax inside his 401k plan. And then we take that money. In my case, I've done this for myself. My business happens to be in Puerto Rico. That's owned under this structure. So I only pay a 4% tax rate. And so after I make my $1 million, I pay $40,000 and I have a $960,000 dividend tax free. Then I take that money and I invest it predominantly for income. I like to make a lot of income-oriented investments. And so like right now, I'm finalizing a loan to a resort in Canada, outside of Halifax. It's 2% per month interest that they're paying me. So let's just say I lend them $1 million. I get $20,000 a month in interest. Well, it's the lender's my Roth 401k. I don't have to pay any tax on that interest income, all tax free. I also invested in a business last year that makes electric equipment for moving pallets around warehouses. Well, that business I invested through this 401k plan. Eventually, when it sells, right now the value's probably doubled. If we sold that business and I realized the capital gain, well, that capital gain's in my 401k plan. I don't have to pay tax on it. So I created this tax-free environment for my money to grow forever. And eventually, when I take that money out, it'll be tax-free as well.
That is very exciting and something that I don't think I ever heard on the show or anywhere on another platform before. So I'm sure this is going to be a great clip out there, right? When we have this published. Noah, is there something I would say like that is obviously a very complex business structure that someone, at a certain level would set up. But what about for the ones who are just starting out, right? The entrepreneur who are just starting the journey and want to say, hey, I just don't want to I want to make sure I don't pay too much taxes. And that's what they worry about and keep them up at night.
Yeah. I do have a list of 23 overlooked tax strategies that your audience is welcome to download at talkabouttax.com. And that goes through a list of these 23 ideas that if you bring them up to your accountant may say, oh yeah, you know what? That's a good idea. The challenge is if you don't bring them up to your accountant, they may never tell you about some of these good ideas. But I'll give you just, maybe 2 or 3 of the items on that
that'll
list.
be great.
So one is to get a second opinion on your tax return at least every 3 years. And the reason you want a second opinion is because every time you're working with a tax preparer, you're getting their best. And thankfully, accountants have one of the highest client satisfaction ratings and certainly the highest trust rating of any professional. And what that leads to is an average retention of 19 years for a tax preparing client. So the good news is build that great relationship with your accountant. The bad news is you're only accessing their advice. And so by going to a second party to say, hey, can you look at my return and see if there's anything that I may have done wrong? You may uncover an opportunity. And you want to do that once every 3 years because that's as far back as you could go to change your tax return if you find out you made an error. One of my friends, he was an e-commerce entrepreneur. He sold sexy men's underwear, and he had done 17 acquisitions. And when I looked at his tax return, I was surprised that I didn't see a lot of depreciation and amortization of the acquisitions that he had done. And so I found out that his accountant wasn't depreciating those acquisitions. And unfortunately, he missed out on $750,000 of tax savings. Now,
that's a lot.
He was able to go back and adjust the 3 years before that, 3 years from when I met him. And he did get a $250,000 refund. So he was very happy that I found that for him, but he was kind of bummed that the other, 500 was left on the table. So that's one idea. I would say a second kind of commonly overlooked idea is what's called the Augusta rule. So this is a rule that allows you to rent your home for 14 days and pay no tax on the income. And what that means for us as, let's say, e-commerce entrepreneurs is instead of doing our photo shoot maybe in our warehouse, maybe we want to bring that photo shoot to our home and rent our home to our business. The business would expense it as rent expense, but you don't have to pick up that income on your personal return as long as you're renting your home for 14 days or less. So maybe your house, you could rent it for $500 or maybe $1,000 or even $2,000 if you have a real nice home. The business gets a deduction. You don't have to pay any tax on that income.
Very smart. Very smart. Is there a third one you want to share with the audience, Noah?
Yeah, I would say a third one might be using the right type of retirement plan. A lot of entrepreneurs, they really don't know what it is that they should be doing when it comes to their retirement planning. For so many of us, we're just struggling with our cash flow to begin with. Saving money outside of our business sounds like a bit of a hassle and a challenge. So if you have excess cash flow, then you have to decide, am I better off paying tax and keeping this money free and clear for me to grow my business? Or am I better off avoiding the tax now, building myself a little nest egg outside of my business? And whether that nest egg is going to be Roth, which means you've paid the tax already and you'll never have to pay the tax again, or a traditional account like a regular IRA, 401k, defined benefit plan. Those types of plans where you're not paying the tax now, you're going to defer the tax to a future date. That might make sense for you too. It depends on, what income level you're at, what asset level you're at, what your saving strategy looks like.
Yeah, well, I work with a lot of young entrepreneurs, Noah, that's kind of afraid to use their retirement plan as a method or vehicle of tax deduction, mostly because they're like, hey, I'm still really young. I'm not thinking about retirement at all, right? But what they don't know is there's still a lot of ways to get that money out, even if you do decide to, retire early or, go the financial independence route, right? Or do you have any thoughts about, why entrepreneurs should still use retirement plan, even if it's still, 20, 30 years away?
Yeah, I often feel the same way for many entrepreneurs, especially early in their careers, that if they're going to put, whether it's $5,000 or to $50,000 of capital away in one of these plans that they're essentially not going to be able to use until they've reached the age of 59 and a half in any, significant way. For some of them, it doesn't make sense because they're making such good returns in their business that taking the money out of the cash flow cycle of their company and moving it into the public markets doesn't make the best sense for them. And so you do have to weigh the pros and cons. But often, if you do have good cash flow and you are saving money, well, it's almost better instead of saving that money in an individual brokerage account in your own name, put it into a Roth IRA or put it into a Roth 401k, because hopefully, if you're successful now and you have more cash flow than you need to spend on your lifestyle and you're saving money every year anyway, well, why not save it tax efficiently? And then if you run into a problem, we'll figure out some solution for how to deal with the problem when it comes, but set yourself up for long-term success, betting on yourself being successful in the long run.
Well said. Well said. Is there a certain threshold, Noah, where you would advise entrepreneurs out there to kind of go seek counsel, if you will, right? Or go out there and look for that tax consultant, CPA, and eventually look for you, Noah, right? Once they make that $1 million a year in profit. What stage would you say is a good, comfortable place where they're like, hey, it's time to outsource, right? Versus I should still do it all myself.
So I think you want to reshop for your accountant when your income gets probably above 150 grand as a single, or maybe 250 as a married couple. Again, get that second opinion from someone. Just see, hey, is my accountant giving me all the good tips and tricks? Download those 23 overlooked tax strategies at talkabouttax.com. Make sure you're taking advantage of the basics. You're paying your kids if you have them, and there's a way to engage them in the business. You're using that right retirement plan. You're using your tax charitable contribution deduction effectively, or your mortgage interest tax deduction, that you're like setting up your things properly. When you get to about $500,000 of income, or and you're maybe like starting to have new product lines or new businesses or doing acquisitions, that may be another mile marker where you'd want to just say, hey, do I need to upgrade my team again? Am I working with a tax preparer where now all of a sudden I'm becoming like their best client? And you don't necessarily want to be somebody's best client. You don't want to be their worst, but you don't want to be their best either. So maybe again, you might want to change the firm that you're working with. And then once you're at that $1 million income mark, that's where you probably want, in addition to your tax preparer, and likely in addition to your financial advisor that might be investing your money, you probably want a tax strategist to help you develop a more long-term tax strategy.
Absolutely. And just hearing you talk, Noah, I'm sure listeners out there is like, wow, I'm missing out on so much right now that I could be doing to maximize my tax strategies. But I'm not, because I haven't even thought about all these planning tips, right? Cool. Noah, thank you so much for all your advice there. What's next for you and your business? Any exciting plans or projects on the horizon?
Yeah, what's next? So two things I would say are exciting. One is we started doing digital advertising, and we're trying to learn how to create a successful return on ad spend.
Okay.
And we're not there yet. We're in our second test, but we're getting better. And I have confidence that we'll be able to figure it out over time, because there are very wealthy, very successful business owners that are out there that are willing to fill out a form on Facebook because they can see that, they're paying too much in taxes. And so our goal is to uncork, how do we message them? How do we give them confidence that we're actually credible and the right team to help them in their multi-million-dollar problems? So I'm excited to solve that. And then the other area that's really exciting for me is artificial intelligence, and finding ways. Right now we're leveraging artificial intelligence mostly on the front end of our business in our sales communications. We upload our sales transcripts from our initial calls to our custom GPT to get sales feedback, and all of our emails are getting drafted or edited through AI tools. But seeing how we can evolve that so that we can provide recommendations faster to clients, so that the speed of execution from right now, the day you meet me, to the day you have your tax strategy developed, we can do it in 3 meetings that take about an hour each of your time, and usually over about a 30 to 45 day period. And what I'm hoping is that by using technology and hopefully linking into other people's AI that may know more about them than they're willing to share with us immediately, we'll be able to extract that information about what is the life they're really trying to accomplish, and how could we accelerate their ability to achieve that life through tax strategies that are aligned with their goals.
That's really cool. Just a side question here, Noah. Speaking of AI, it's everywhere right now, right? Including AI agent. I think it's the buzzword of the year. What would you advise business owners out there to do with AI? Is it time to kind of fully embrace it and make sure it's a part of everyday business?
Oh, no doubt. I think if you're not embracing technology to leverage your performance, you'll be out of business. And you're going to be out of business because of the margin erosion. Because the better the technology can do at eroding the costs of us to deliver whatever product or service that we're offering to the marketplace, that eventually shows up in margins, right? We're not going to be able to keep the margin at where it's at, because again, people are going to compete on price. And so you want to make sure you're embracing this technology. Otherwise, you're going to end up with price competition and margin erosion. So you want to be sure you're at the forefront and figuring out ways to, do dynamic pricing on Amazon and find the best inventory solutions, leveraging technology. Say, hey, you're the best, buyer's agent working in this industry looking for this product, give me the top 5 manufacturers with minimum order quantities of X, right? And have those agents out there working for you for supply sourcing, for innovating on the products that you've already developed, for finding ways to communicate directly with your customers and create value for them. And I believe that, technology is going to be ubiquitous in 5 years. So anything that we're using technology to give us a competitive advantage today, I think it's going to be eroded in 5 years because the technological advancements are going to make it so that everybody's capable of having the same, what we might call now strategic advantage. It's all going to be democratized. So we've got to find other things that we could compete on in the long run.
Absolutely. Don't be afraid to use it, embrace it, right? Make it part of everyday business, right? Noah, we're at the segment where we want to give a final advice, right? If you think back to your days as a young Noah, if you can give one piece of advice to someone just starting their entrepreneurial journey, what would it be? It can be 3 simple steps, 1 step, something that would get them off their couch and get started on the journey.
So again, I'll speak from my own experience and my own area of expertise and say that the biggest missing link that I see, especially among successful entrepreneurs, is that they do not have a tax strategy. They go to their accountant to get their tax return prepared. And there's nothing wrong with that inherently, but as entrepreneurs, we need to know it's our responsibility to develop our tax strategy. Our accountant is not going to come to us and tell us, hey, you should be doing this, that, and the other thing to set yourself up for a bright future. So be sure to own it, become responsible for it, the same way that you've probably vetted your supply chain, the same way that you've become an expert in digital marketing, the same way you've become an expert at helping to, SEO your listings. You've got to take the same approach when it comes to your tax strategy and become an expert in your own strategies and goals.
Yeah, I would say tax is probably one of the last thing on people's mind most of the time, right? They're not thinking about it until maybe April 14th, right, of the day. And that's not the way to go about it. By then, what we can tell them is there's probably not much we can do for you, at least for the last tax year, right? Well, we welcome you for this one, but you kind of missed the mark if we haven't been tax planning the whole time through. So, Noah, that was wonderful, fantastic. There's so much impactful advice in there. I think you kind of alluded to throughout this podcast already, but what is the one thing that you'd like to kind of give away to the audience out there that's going to be super valuable?
Yeah, sure. If you go to that talkabouttax.com link, you'll get those 23 overlooked tax strategies. What I found was so many people would come to me that weren't making $1 million or more, and they wanted, Noah, what do you know that I should know? And so I put that list together as a gift to the people that, aren't qualified for me to help you today, to just help you get those basic building blocks in order. Print that out, take it to your accountant, take it to the second opinion that you're going to go to. Don't be scared to ask questions. This is a great time of year for it. We're approaching the summer. Summer's the slowest season for accountants. It's the best time to get your second opinion and to make sure that you're checking all the boxes that you should be checking when it comes to developing a smart tax plan.
Some very sage advice there. We'll make sure to put it in our show notes and everywhere that you listen to your podcast. Noah, thank you so much for being on the show. It's wonderful to have you, one of a kind. And yeah, thank you so much. And we hope to see you back one day.
Thanks, Alan. Appreciate it.
Thanks so much. Audience, we out.